Hello, everyone, and welcome to Res Girls. We will be talking about the Great Recession that happened in 2008. I'm Botch, and my co host is
Juluk Nicholas.
We are going to dive into the Great Recession. The Great Recession began in the U.S. officially in December 2007 and lasted until June 2009. This extended over 19 months. Juluk, what was the housing bubble and why did it burst?
The U.S. housing bubble was a period of rapid and sustainable home price increases fueled by loose lending practices and low interest rates. The bubble burst in the mid-2000s when housing prices started to decline, leading to a wave of foreclosures and financial crisis that triggered the Great Recession of 2008. Bachi, how did risky banking practices and subprime loans lead to the crisis?
The primary cause of the Great Recession stemming from the 2008 financial crisis was the burst of the housing bubble triggered by excessive mortgage lending, especially to those with poor credit histories and subprime histories. This led to a cascade of events, defaults on mortgages, plummeting home prices, and the failure of major financial institutions, eventually resulting in a deep economic downturn. Juluk, what role did Wall Street and deregulation play?
Deregulation played a significant role in the 2008 financial crisis by creating an environment where risky lending practices, fueled by a lack of sufficient regulation, led to a collapse of housing market and subsequently triggered a wider financial crisis meltdown. Bachi, what are the terms like foreclosure, recession, and bailout?
When a homeowner falls behind on mortgage payments, the lender can initiate legal process to take possession of the property and sell it to recoup the outstanding loan amount. This process, known as the foreclosure, can lead to the homeowner losing their home. A recession is a period of economic contraction marked by a significant decline in economic activity, including things like job losses, decreased production, and reduced consumer spending. The Great Recession, which started in 2007 and lasted until mid 2009, was a particular severe recession that had widespread negative impacts. During the recession, the U.S. government implemented the Troubled Asset Relief Program, a bailout to stabilize the financial system. TARP involved the government injection capital into falling financial institutions like banks to help them avoid collapse and restore confidence in the financial markets. The government also provides bailouts to struggling companies like automakers like General Motors and Chrysler. Juluk, how were jobs, housing, and savings impacted for average Americans?
The 2008 recession had a deep impact on the housing market, leading to a significant decline in home prices, a sharp increase in foreclosure. Foreclosure is a legal process where the lender, like a bank, takes ownership of a property like a house after the borrower defaults on their mortgage payments. The bursting of the housing bubble, fueled by subprime mortgages, caused many homeowners to lose their homes as the value of their properties plummeted below their mortgage debt. A subprime mortgage is generally a loan that is meant to be offered to prospective borrowers with bad credit records, meaning they would be unlikely to pay back the loan. The recession also led to a decline in home building, further worsening the situation and creating a seller's market. Not enough houses in some areas. Bachi, what happened to young people, families, and businesses during this time?
During the Great Recession of 2008, young people, families, and businesses faced significant challenges primarily due to high unemployment rates, reduced income, and financial instability, young adults experience significantly higher unemployment rates compared to older workers, making it difficult for them to find jobs or establish careers. More families fell into poverty as a result of job losses, reduced income, and rising costs of living. Many businesses were forced to lay off employees due to decreased demand and profits, contributing to high unemployment rate before the Great Recession 2007 to 2009. The unemployment rate in the United States was 5.0 in December 2007. After the recession in June 2009, it got high as 9.5%. Juluk, how did this affect confidence in banks and the government?
The 2008 financial crisis severely eroded public trust in both banks and the government. Confidence in banks plummeted as the failure of major financial institutions like Lehman Brothers revealed the systemic risk within financial system. Government intervention, while intended to stabilize the economy, also raised questions about the government's role in the market and whether it is acting in the best interest of the public or for the benefit of large banks that caused this crisis. Bachi, were there groups or areas hit harder than others?
Yes, some of the groups and areas were disproportionately affected by the Great Recession of 2008. Specifically, minorities, young adults, men, and those with less education experienced more job losses and housing foreclosures. Geographically, the U.S. South and West were hit harder compared to the Northeast. Juluk, what did the Bush and Obama administrations do in response?
In response to the 2008 financial crisis, the Bush administration and Congress initially enacted the TARP, while the Obama administration and new Congress subsequently passed the RRATRP, aimed to stabilize the financial system by purchasing distressed assets from banks. While ARRA sought to stimulate the economy through government spending and tax cuts. Bachi, what role did the Federal Reserve play?
During the Great Recession of 2008-2009, the Federal Reserve played a crucial role in stabilizing the financial system and mitigating the economic downturn. The Fed lowered interest rates and provided emergency liquidity to banks and implemented programs like quantitative easing to stimulate the economy. Qualitative easing is a non-traditional monetary policy where a central bank purchases financial assets, often longer-term government bonds or mortgage-backed securities, to inject money into the financial system and lower long-term interest rates. Juluk, did recovery take a long time?
Yes, the recovery from the Great Recession of 2008 was very slow. According to most measures, the economy took several years to recover from the depth of the recession. Key indicators like unemployment and real median household income took several years to return to pre-recession levels. What lasting changes did it bring?
Some say the recovery was slow because of the severity of the financial crisis and the challenges in stimulating the economy through monetary policy. Others also point to the fact that the recovery was slower than usual compared to past recessions. Though coming out of the recession, there was an increase in regulation for the financial institutions like banks and others to try to prevent this from happening again. There also became a willingness for the federal government to bail out struggling businesses using taxpayer dollars to prevent blows to the economy. Look what debates came out of this crisis about capitalism, safety nets, or inequality.
The crisis highlighted concerns about the lack of regulation in the financial sector, leading to excessive risk-taking and the creation of toxic assets. Some argued that expansions of the safety net created work disincentives or that the programs were not sufficiently progressive in targeting assistance. Some argued that rising income inequality played a role in fueling the housing bubble and the subsequent recession. Bachi, the response included massive government bailouts, monetary policy adjustments, and regulatory change aimed to preventing future crises.
The response included massive government bailouts, monetary policy adjustments, and regulatory changes aimed at preventing future crises. We can learn to build more resilient financial systems, practice responsibility borrowing, and promote financial literacy to be better prepared for future downturns. Kuyana for listening to our podcast.